Good morning, everyone. Let's get going. So I have a chart here up of the S&P 500 futures, and as we were talking about on Sunday evening, we gapped up from Friday afternoon's sell-off. Let me zoom in so you guys can see that a little better. So on Friday evening, we had a bit of a sell-off into the close, but once we opened up on Sunday, we tried to press up into 2982, which represents the low of this little consolidation right here, and we sold off, basically bounced around between 2975 and 2965 for the rest of the evening before some headlines coming out from China concerning the US China trade war, so to speak, that temporarily brought us down to 2954, which not coincidentally happened to be the high of Thursday's range right here. And so what can we look forward to now? Yesterday was, if you're an active trader, yesterday was death by 1,000 cuts in terms of just little to no volatility whatsoever. And so we did not get any follow through to the downside. We pressed up early and we just continued bouncing around within this almost 7 point range all day. And so basically, it's much ado about nothing. Uh, However, in the wider context of things, again, as we spoke about on Sunday, what we do have to look for is a break of Friday's high at 29.94 or a break below the intermediate swing low at 29.54 before we have any real momentum to the upside and or downside. At this point, we are literally sitting distance from all-time highs at 30.24. So just keep that in mind. This literally could break in any direction. I would not be surprised if we were to break up above 29.94, that we continue to at least try to test all-time highs at 30.24.50. And if we do, possibly by some geopolitical news headline or event, break below 29.54, then absolutely 29.45 is in play, all the way down to even 29.15. And so if you are an active trader, keep those levels in mind. And if not, there's really much to do about nothing. Let's take a quick look at some individual names. So Facebook, you can see here, has been having a bit of a tough time getting out of its own way, but we do have earnings and earnings season coming up, so I would expect just a little bit of momentum to start creeping in, even if it is speculative for Facebook's upcoming earnings. You can see we had a nice descending channel here that we tested the top of at around 180, 150. We have now broken above that and consolidating above. So as long as Facebook remains above this low at around 182, I would probably lean long against 180. Drops beneath 180, then we're going to be chopping around in this range and or looking to revisit all the way back down to 173. Let's take a look at Apple. Apple, I believe, in sad to say, because I'm not really a fan of it as a trading vehicle, it has been holding up the market and has been one of the bastions of strength that remains in the market at this point, hitting all-time highs again this week. Let's take a longer look at Apple to see what's going on. Think Swim seems to be loading a bit more slowly this eve this morning. So as you can see, I'll change this actually to a weekly chart just so we have Apple broke out to all-time highs above 233 earlier on this week, and seems like no stopping it thus far. If you're an active trader, I would definitely be looking at that 230 level to begin adjusting, trimming long positions, and or adding shorts if we break below, break and hold below. On the long side, I would use 232, that 230 to 232 area to begin scaling in long. Let's take a look at Amazon. Amazon as well has been practically bouncing in our range for quite some time. After we had this last intermediate swing high at around 1855, Amazon has been in a clear defined downtrend, but we have a bit of consolidation now going on inside of here. Let's try rectangle so you can see that a bit better. So as long as it's stuck within this range, much ado about nothing other than to play the extremes of the range. So you go long at the bottom, you go short at the top until you have a confirmed and sustained break of either side of the range, and at which point you then have to adjust in the direction of the trend. Let's take a look at Google. Google again, much ado about nothing. Of course, we have this nice uptrend in play, but ever since making this high at 1296 the day before its earnings, all the way back here in May, it has been struggling to reach this high once more, but we are still firmly in an uptrend. We are above the 50-day average, we're above the 10-day, we're above the 200. And so Google to me, although it has not been the screamer of a trend or a moneymaker this year in 2019, I believe you have to tactically stay long against key levels. So you have this swing low here at 1163. If you can possibly begin scaling in long at around 1190, I think that's going to put you in good position. As a short, I would be looking at 1235 to begin scaling in short. If we can get there using 1248 and or around 1250 as a stop on that. Let's take a look at Chipotle. Chipotle has simply been gangbusters this year. What a trade. Take it back to the 4-hour. So as you can see, we have a really nice uptrend going on. Nice channel that has recently formed. We broke down out of this little ascending channel and are consolidating within this newly formed range. And so I would definitely be looking at the extremes of the top of this range, perhaps depending on what happens in its nearest earnings, to give us an idea and a clue as to trajectory for the next 3 to 6 months. It has been holding up magnificently well, which tells me that this may have a 1,000 figure in its near future, but you can never tell given Chipotle's propensity to have negative news headlines at time. Perhaps one of those things turns nasty, and we can very well revisit 700 in a hurry. And so I would still lean technically long here on Chipotle, using that low at 800. And because Chipotle is fairly volatile in its movement, I would even use 795. Give it just a bit more room to breathe intraday. but probably close that long on a sustained close beneath 795. Take a look at Costco. Costco, in my opinion, headed to all-time highs once again to retest this 307 range. We were talking about this in a video about 2 weeks ago. And as you can see, this 280 area is so crucially important to continue to have momentum to the upside in Costco. As you can see, we came back to test that 283 area once again, several times held, several times held, several times held. As you can see by the wicks, the buying demand that came in at this point to push prices higher. We do have some wicks forming at the top, but I believe that is actually pretty bullish in this market because it has simply died within this very tight range. So we know that a sustained, possibly impulsive move will follow next. After price consolidation comes price expansion. So I would be leaning long on Costco here, but I would not rule out a shakeout to 290 before we possibly rebound to again test 307. Let's take a look at the Mobile US, some of the dividend paying stocks. Utilities have been holding up incredibly well in this market, which tells you that for all the bullish sentiment, we are actually still on the defensive. You can see we have a really nice uptrend going. We can begin to see a little bit of supply begin to take control. And so I would watch this one, especially, let's see what Verizon is doing, if it's doing anything different. No, so you can see Verizon is coming into a bit of supply up here as well. So I would be cautious on utilities, but they've shown so much strength throughout the year that they're probably gonna strategically be a buy at key inflection points, such as the 50 or the 200-day moving average. So let's just keep an eye on these names for opportunities as we go forward. Thanks, guys.